All right, he'll be checking it out.
Well, hi, we're here with Real Life and Realty again. This is Mark. He is awesome. He is a guru of all loans, but today we're going to be talking about reverse mortgages. So we'll wait and let some people come on. Now with the two of us, I don't have my head popping out of the tree, so it's actually
we're well balanced.
Nice. Yes.
Yes.
It's better with two people.
There you go. Definitely.
Yeah.
Wonderful.
Also, the Real Life and Realty magazines are starting to go out. So if you are a owner of a business and you would like these magazines to go to your business, please let me know. It has the top 25 homes or 30 homes around your surrounding area. So if you have a business in Orange or Brea, we can customize it to you. It lets you know what all the houses are going for in your neighborhood. We are going to be sending out once a month. So if you have a business and you would like to receive one of these, by all means, message me in the comments and I will be more than happy to get them typed up and sent over to you once a month.
Right on.
So we're at a minute 18, good enough to go. So this is Mark.
Hello.
I don't know anything about reverse mortgages. Well, I know very little. However, when we were on a few weeks ago, one of the comments from Sunny, see, Eric's the first one to join.
Eric B.
One of my kind of uncles asked me about reverse mortgages. And so since I wasn't able to reply to him in the comments, and I know a lot of people ask me about reverse mortgages, who better to bring on than Mark?
There we go.
So what do you think about reverse mortgages? Who do they help? Who do they not help?
I think well, obviously it's really designed for a senior citizen. That's really where it comes to. And it comes where folks have had, time to retire. And, one of the biggest things we have in our lives is our homes, as our asset. A lot of people, that becomes their biggest retirement. And I know a lot of folks are what we call house rich and cash poor. So they have phenomenal amount of equity, but they don't have a lot of cash coming in. So great thing about being a reverse mortgage is that you can actually, when they say reverse, what you're saying is that you are going to take the cash out of the home and you get cash, but there's no mortgage payment. So all you really have to be responsible for all year long is just your homeowner's insurance and your property taxes. So let me give you just a 1-minute story, because I have my mom and dad are in that process. And, dad's almost 90 and he's a veteran. Yeah. He's
God, I hope I live to be 90.
Yes. Still in the gym training, works out. Just unbelievable. I'm grateful that they're still healthy. Yeah. Mom's 84, so they're doing well. But dad has, he's got the pension from the veterans and all that. But the other nice thing about it is, dad has a situation where, he's got the income coming in and mom doesn't. So, when dad moves on, there really isn't a lot of cash left over. So when dad moves on, there's not going to be any cash really, the $5,000-6,000 they have coming in every month is not going to be coming in anymore. Because it's a second marriage. So as a result, what we're structuring right now for them is we're going to do a cash out reverse mortgage, and they'll take all the cash out. And here's what's nice about it is when dad moves on, their mom gets to stay in the home. Now here's the beauty. She does not have a mortgage payment for the rest of her life. The only thing she has to worry about is paying her property tax. So my brother and I, if something was to happen, we would certainly be able to handle that. So it's great for folks that are looking to retire, looking to eliminate their mortgage payment. Think about it. They have about a $2,000 a month payment. So if they're not making a payment for the rest of their lives, and mom's 84, let's say she goes another 10 years, that's $2,000 a month. That's $24,000 a year. You add that up. That's, what does that become? 24, 50, almost $125,000 just in that 10-year time frame.
Yeah. That
she gets to put in the bank. What it allows her to do is allows her to go and travel, allows her to have the paid expenses. And even if dad's not here any longer and moves on, because she would never be able to make a mortgage payment on her own. Doesn't have enough pension or money coming in. And that's true for a lot of folks. They just don't have enough money to survive if one spouse goes, especially the breadwinner. So in this case, here's the other nice thing about a reverse mortgage is the fact that when the spouse moves on and you are the surviving spouse that stays there, you can stay on for as long as you like until you move on. The house is always yours and it always stays in the family estate. Now, when you do move on, because here's the biggest question everybody says, well, the state's going to get my home, and they own the home, and I want my house to go to my relatives. It always will stay with your relatives. You, as a surviving spouse and the last one to go, once you pass on, then your family members have an opportunity to refinance take out the reverse mortgage, pay the government back, and keep that home. Or they can sell the home. They have up to 6 months to do that with a 6-month extension. So they have plenty of time to go ahead and keep that home in the family estate if they choose to. They just need to refinance and get them paid off. So it's a wonderful, wonderful feature for that. It really has freed up so much cash for a lot of folks to be able to start traveling and do what they want to do in their life.
So how much equity do they need to have in a home? So say I own a home for $500, but I have a mortgage already at $300 on it. How much equity do they have to have in order to qualify for that?
Usually you would have to be around 50%, 60%. Now, Dad being almost 90, the older you get, they base everything on the insurance actuary tables. That starts at 100. So if you're 90 years old and Mom being 84, they would base it on Mom being 84. You would probably get about a 65, 70% of loan to value. So if somebody has a free home and clear, 500,000, they're going to see probably 250, 300,000 cash come to them. Now, here's what's really cool. You can get that all in one lump sum. And keep in mind, this is not income, so there's no taxes.
Oh.
Right, it's not income. It's just equity out of your home. So it's all cash free.
So even if you get it monthly as a monthly payment and you file your taxes every year, you don't file that as income coming in?
That is correct. That is correct.
Awesome.
Yeah, that's correct. So you can have it several ways. You can take all cash. You can take a monthly sum. You can take some cash, 50% cash. Let's say, I only need out of 300,000, I only need 150. That's more than enough to make me comfortable and travel for the next 10 years. And I can, give away some to my family members and my grandkids, whatever you want to do. The balance of that could come to you in monthly checks for as long as it extends. So
now, does it cost more if they pull it out all at one time or do it monthly?
No, it's the same. There's a little bit of service charge for the monthly checks. It's not much, but it's not much at all. So no, it's just a tiny service charge for issuing checks monthly, just like issuing a coupon. So, and
now, can it go directly into their account?
Yes.
Oh, awesome.
Yeah, you can have directly disposed right into their account. Yeah.
Okay.
So it's a wonderful tool for that. And I encourage folks who are at that stage in their life, or you have family members that are at that stage in their life, and they're still making a mortgage payment, or they have, the home is free and clear. Like my fiance's house, her mom's free and clear. If she wanted to, she could actually, take all the cash out and travel the world. She doesn't want to, but, there's a lot of folks that don't have a lot of money coming in. Social Security is not a whole lot.
No.
Cost of living has moved up.
Yeah.
Cost of goods have gotten higher. Some folks are just getting a couple thousand. I did reverse mortgage for many, many years during the crash, and we helped so many home buyers that ended up getting into some of these ARM products that the mortgages are raising. They're almost losing their home. So I did a lot of refinances for folks getting out of their home and getting a reverse mortgage. And I can't tell you what joy it is to have a senior citizen not lose their home and have to be forced to move to an apartment, which they would still have a rent to pay.
Yeah.
And get them out and not have another mortgage payment for the rest of life. That's the whole key thing is you don't have a mortgage. If you're making a mortgage payment now, you don't have a mortgage payment for the rest of your life. If you're free and clear, you still can take the cash out and you still do not have a payment to make.
Qualification parameters. What if they have notice of default because they haven't been able to make their payments, or
you do have to, then you would have to, we have the normal criteria there. They would look at that and say, okay, we got to make sure you're on track. You're not in default. You can't do a reverse mortgage if you're default. So you would have to catch up, cleaned up, and then get back in line, just like we would do a regular mortgage.
Is there a minimum credit score?
Usually about a 640 is what we need on the FICO score, 640. So, and most folks have that. If not, then,
we can work with you to fix your credit.
Yeah. Between Kelly and I, we have strategies that we've helped many, many clients work on their credit and get them up in the next 3 to 6 months and get you back to a point where you can go ahead and get a reverse mortgage. So
now, what about income qualifications? If they're getting maybe only $200 from Social Security, do they have to have a certain income?
They do have to have a little bit of income just so they know you can make the property taxes. That's pretty much all they're looking for, some sort of income coming in. And usually if they have a pension, or if they have Social Security or something of that nature, then they have enough to come in. So, so that's the best way to do it.
Now, I'm sure I already know the answer, but if you're getting a monthly payment, they can't impound them to where there's enough money in the equity where the lender just pays your taxes and insurance?
No. Usually they will let you up on that. Yeah, because you're not making a payment. Yeah. So you're still responsible for that. So I believe you can. And I have to just, good question. I'd have to see if there's a way that they can automatically withdraw it from the account after they have it set up. So that may be something you can do. I don't know.
Because
Good
that would
question.
be
I'll find
nice
that out.
because some people
Yes.
forget to pay their bills,
Yes,
and
yes.
since taxes aren't monthly and they're twice a year, if they forget, it'd be nice
True,
if
true.
they.
If they can automatically have it drawn out of the account
Yeah.
from where the money sits. Yeah, that's a
Absolutely.
good point. I don't know. That's a good question. I will find that out. We'll take it up. Got tripped up on that one. Good call.
So any questions out there? I see that only Eric and Mike are on. Usually most of our viewers come on after the fact, and we've got quite a lot of viewers coming on afterwards. We've gotten somewhere around 1,200 to about 3,500 views on these weekly videos. So by all means, watch them after the fact, comment. I still will try to get back to you as soon as possible. Anything else you think people should really know about reverse mortgages?
Yes, one of the hot things that's going on right now, which I'm going to help my parents because they want to move to Arizona. They want to get a single story out of Carlsbad. Son's out there. They got family out there. You can do, and a lot of people don't know this, but you can do a reverse purchase.
Oh,
You can actually buy a home on a reverse mortgage program.
awesome.
So if you're a 50 loan to value, you have to put, let's say they're looking at a $350,000 home. They'll probably only have to put down 100,000, maybe 1,000, something like that, maybe less. So we would finance the balance of that. And again, no payment. Here's what's great about that. So you could pay $350,000. They're looking at a place at $325,000, $350,000 in Arizona. You could pay all cash, which they could easily pull out from the proceeds of their sale in Carlsbad. They could do that. But I said, Mom, why don't you just put down, you only need to put down about $100,000 cash, keep the $150,000 in the bank. Again, we know life happens. It's important to have the cash, in the bank. So they can, again, $100,000 down, hold $150,000 cash in the bank, go travel the world for the next 10 or 15 years. Mom's from Belgium, so it gives her time to go and see family. And again, no mortgage payment at all. So you can buy, in your age, you got to be minimum 62 of the two parties. The lower of the two has to be 62. So if you and I were together, I would be 65, you were 62, we would go on you 62. Okay. Yeah. Or if I was 65 and you're 61, we'd have to wait one more year to you to get 62. So the lower of the two families, of the two borrowers, the minimum has to be 62. As long as you're 62, then you qualify. Now, and when only 62, you got to remember, they're basing it on the fact that you're going to live to 100 years. So they're looking at you not making a mortgage payment for 38 years based on a 100-year table. So you're probably only going to be looking at on a refinance maybe 35, 40, 45% is probably what you can take out if you had a home free and clear. Same on the purchase. You probably have to put down 50 to 60% down, and they'll be able to finance 40%. Or no, finance 65 and 40% down. So
basically, the older you are, the more money you'll get monthly because you have less time to 100. Yeah. Or if you're 62, and granted, we all hope we live to be 100. But if you're 62 and you're taking a monthly, your monthly payment is going to be a lot less.
They look at dad as being 90 or going to be 90. They say, well, based on our schedules, you're only going to be 10 more years you're only going to live. Here's an interesting factoid for you. If you live, what happens if they live beyond 100?
Yeah.
What happens? The mortgage banking firm, like us, eat that difference. Oh. We eat it. They can never make up. If they were to overexceed, for some reason, let's say the values went down, and all of a sudden they owe more. We as a bank never charge them other than what they paid into. In other words, if they bought it for 4 and now it's worth 6, we did a reverse mortgage. 10 years later, the market went down. It's only worth 5, and they owe $550. They would never make up that $550. They would never make up the $50,000 difference. No, they never do. They're not liable for it at all. The bank is. It's a risk they take. So if somebody lives beyond 100 and can live on for another 10 years, it doesn't matter how much they're over encumbered. They never have to pay. They have to pay exactly what they originally started with.
So then, to get a little tricky on that one, say you come there and you're upside down and it's a short sale and it comes time to sell it and you need a real estate agent. Who pays all the costs to sell it?
Good. I don't know. Good question.
Or the bank, because it costs around 8% to sell something once you figure in commission and closing costs.
I don't know. It's a good question. I have not had somebody that's been in the rears on that situation or in a short sale status.
I mean, I'm sure the bank pretty much protects themselves pretty good to where they're usually not in the rears on it.
Exactly. They almost never. They've been doing this for 40 years. Reagan started this whole program, and no one's ever really been in the rears. So it's and you usually. What we're seeing, and if somebody says, well, my gosh, if I'm not making a payment, that little bit is getting added on. I've done the analysis. you almost never come close to the value because the value is just continuing to appreciate. And we see it even today.
So do banks charge an interest rate? So if you're getting $2,000 a month and that's $2,400 a year and you die 1 year later, is what is owed the 24, or do they collect a little bit of interest? How did the lenders make their money?
They do collect an interest, yeah. They have an interest rate. It can be anywhere in the mid-4s to upper 5s, depending on credit score, how much cash out. But there is an interest rate. So that little bit of interest is what gets added on to the balance.
Is it usually fixed or adjustable?
It can be both. You have an option to do either one, yeah. The other thing I've had one client, we've done this once. We refinanced his house. He took all the cash out, and that was like 10 years ago. And I think about 8 years later, the value went up so high, we did a refinance, reverse mortgage again, and took out even more cash. He got older, we were able to, and the value increased, so we were able to do both. They will take a little more cash out and refinance. He had some tax bills he wanted to get paid, things that accumulated over the last 10 years, and we did a refi and paid off all his taxes. So you can do actually a refi on an existing refinance, yeah. So very much like a forward mortgage or a regular mortgage, it's just there's no mortgage payment made, which is wonderful for the client.
Now, once you do it, can you take yourself out of title and put title in a trust? So if I owned it as me and my husband joint tenants, then afterwards the reverse mortgage, do they let you change the title? Can I put it on the dueña's trust?
They don't. They would let you do a living trust, a long living trust, just to protect you as a family.
Okay.
But they don't see, because once you have it in a trust, and the ownership of that actually changes. And once you change ownership, then that changes the dynamics of the loan. So you're not really allowed to do that. Okay. You can put a living trust to protect you and the family, but a trust in terms of changing the name and changing the ownership later on because the house is in a trust changes the dynamics of the trustee.
I would just think more or less for if the person dies, so you can name the correct heirs that you want it to go to without it going to probate.
Correct. And that automatically happens. Yeah, definitely. Yeah. So that's what's one of the neat processes of it.
So I'm assuming too, also in the process, there's probably a beneficiary that they name in the loan, I would assume. They do, just like when you do life insurance, you name a beneficiary.
Yeah. And if you don't, it goes back to the state, just like a probate.
Okay.
Yeah. So if you don't have an heir and the last party dies off, then obviously it goes back to the state. State sells the home and then pays back the government on the loan. Because it's a government issued program, the reverse mortgage.
Now, of course, family members like each other and then don't like each other. So
true.
Can you change the beneficiary at any time?
Yes, you can.
Okay.
Yeah, you're not. Yeah. As long as whoever inherits that property after the second party dies, I'm assuming second party dies, then yeah, you can change that heir. Whoever gets that is then responsible for, making that sale, refinancing it if they want to keep it in the family, or go ahead and sell the home altogether and pay off the existing.
And in the middle of it, they can if they decide they no longer want it, they can sell it at any time.
Yeah, absolutely, yeah, awesome. Yeah. The only one other caveat to remember is that you have to, if you for some reason you have both parties, one passes on, we have mom left, and mom gets to a point where I have to put her in a facility, and let's say that I would not do that. I mean, we would figure out a way to take care of her, but let's say it happens. She has about up to a year to be in a facility. She has to be in that property within you have to be in that property at least minimum 6 months, 3 to 6 months.
Got it.
If you get out of there more than 6 months to a year in your facility, you're not going back. Again, that constitutes as you're not living in the home any longer. We have to now. So in other words,
it can't be a rental. It has to stay.
That is correct. Thank you for clarifying that. Yeah, exactly. It has to be sold or I'd have to refinance it and take her out. And my brother and I would take over or whatever we would do. Yeah.
So of course there's people who don't always follow the rules. So say someone dies and they don't necessarily tell you right away and the heirs take forever to sell it. If they don't do it within the 6 months, what happens? The lender comes back and finds their own agent to list it?
Yep, they take over. They would take over the property. So you have generally 6 months to a year, and after a year, you'd have to write an LOE, letter of explanation, why you haven't sold it, whatever the reasons are, you have another 6 month extension. So they give you a fair amount of time to be able to really have the opportunity to sell that property in the right way.
Now, if the bank does have to come in and they sell it themselves, and there is still equity left, do they try their best to try to give it to the heirs? I would assume so.
They do. If there's something left over, they do give it back to the heirs. Yeah, they will.
And of course, if the heirs don't come forward, then it goes to the
then
state.
It goes to the state. Yeah, it's just like probate. Yeah.
State loves to take our money.
State has a trust, by the way. It's called probate, and they will take everything for you. So,
yes.
So don't let them do it.
Well, and I make jokes. Me and my husband, we have a house in Boyd Park, and he's the only one on title. And granted, California's a community property state,
Right.
it would go to me. But since I haven't added myself to title, and it's not that he doesn't want me on title or I don't want to be on title, it's just we're lazy. And so if he dies, it would go to me, but it would have to go through probate. And
Yes.
that would be about $28,000 that we would lose
Oh, yeah.
because we're too lazy to put in the trust.
Oh, yeah. It happens a lot.
I
It
know.
happens a lot. And then people, the state will, if they figure out how much is there in terms of equity, how much they can make, they will run that out for that maximum dollar.
Oh,
They're
absolutely.
a profit center. I mean, they will actually take years on something that could take 6 months.
Well, and I keep saying we're going to do it just like life insurance. And, you can't do it after you die, so you might as well do it.
You've got to do it. Yes, yes,
So.
yes. Proper planning. So, but I honestly, the reverse mortgage, there's been so many bad information. And I granted, 15, 20, 25 years ago, they were a bit challenging. Back when they originally started, the state was able to go ahead and take over the property. But today, that's not the case at all.
And I think a lot of people just don't know enough about it.
Yes.
And so.
Anytime someone says, "Oh my God, it's the worst product," I said, "Why? What do you know about it?" And they hear the numbers. The state's going to take your home. That's not true. The state will never take your home. They don't want it. They want you to have it, and they want you to sell it and get rid of it and pay back the mortgage and be done with it. They don't want to take over that property. They really don't. It's more of a problem for them. So.
Well, and for all of you guys who see this later, if you don't know me personally, I am extremely hard to extremely picky when it comes to my lenders. Mark has had to deal with the battle of me sometimes. So if you do need a reverse mortgage, by all means, call him. I wouldn't necessarily stamp my stamp of approval if I didn't believe 100% in Mark. He's done these before. He knows what he's doing. Something with a family member who's old or a trust, you don't want to waste your time with someone who doesn't know what they're doing, especially when it comes to loved ones. So really, really, really go with someone who is great. And I totally recommend Mark. You want to go ahead and give me your phone number and stuff?
Well, that would be honored to. Thank you so much. And again, thank you for your time today.
And I'll put the phone number in the comments
Great.
too. So if you don't hear it, you can come back.
You can always reach me at 949-683-2490. That'd be wonderful. Yeah, call me with any questions you have. We have a full department in our company. We are a direct mortgage banking firm. So I have my underwriters, processors, everything's in-house. So we do everything right in place. And I have a whole division that's just nothing but reverse mortgage. So we've got lots of experts in that field that can help us out from the underwriting standpoint. Questions, concerns, issues, things that might come up you're not sure about, call me. We'll get those addressed and see if there's a way we can fit you into something like that in terms of reverse mortgage.
And even if you're not sure if it's the right loan for you, by all means, call him and he'll walk you through it. I've called Mark plenty of times to annoy him about 5,000 questions that I wasn't sure about. So bug Mark, call him. If you have any other comments or see Eric's even clicking you too. Great choice.
I'll see you tomorrow. Hey, thank you, Eric. Appreciate that.
By all means, give him a call. And if you have any other questions in the comment, leave them there. And Mark is attached to my Real Life and Realty. He will see them, or I will bug him with your comments. And that's that. Thanks, everyone.
Wonderful.
Oh, next week. I don't know what I'm talking about next week. I will figure out what next week's
Down payment assistance program.
That is going to be the following week.
Okay.
Yes. So, because I am actually going to be in Playa del Carmen. So when I'm gone,
Nice.
come in and talk about 203K loans.
Wonderful.
But we will figure out what next week is. Maybe we'll bring up someone who can help with credit. I think credit's a good.
Huge.
Yeah.
Huge. Yeah.
We have a few people who work with us in credit, and actually we'll just say next week is going to be about credit. Have several credit people who will come in here and tell you what you need to do to fix up your credit. So stay tuned. Bye.